Hey everybody, Jeremy Goodrich here, your host for the Shine Insurance YouTube channel, and we are in the middle of the business insurance series. Commercial insurance, how does it work? How do you make sure that your business, whatever your business is set up for success if bad things happen? Look, none of us want bad things to happen, but sometimes they do, and that's why we have insurance, so we want to make sure that's right. So this series is all about making sure you have a foundational insight into how insurance works, so when you go to your advisor, when you're talking with your insurance agent, you know what you're talking about and you're making sure things are right. This video is number 3 in the series. And in some ways, I think it's one of the most important ones. It's about liability insurance. And the reason I think it's so important is liability insurance, even though I'm going to move through this really fast, is really diverse. There's a whole bunch of different things. And when we look at liability insurance without any knowledge, it's like, okay, well, I just need one thing. I guess I'm good. But what you'll come out on the back end of this video with an entirely different understanding of how liability insurance works and whether you have the right things or not. So let's dig right into it. Again, like I said, this is the third video in our business insurance video. So let's jump right into it. So what will we cover? We're going to talk about the definition of a liability coverage and then what liability coverage covers. Right? So those first two things will be very quick. They'll take 30 seconds. The third, we'll talk about types of liability insurance. And this is where I really think your mouth is going to drop. Your jaw is going to drop when you realize all the different things that you could or could not have on your policy and how important it is to understand it. And then finally, some contractual liability language. Going to give you some insight into how contracts push liability from one entity to another and how you can make sure that you have that right. Before we dig in, quick reminder, the portfolio overview is a document that will help you to truly organize your insurance. You can go down into a link in the description on this YouTube channel and find out how to get that. In that document, we have liability coverage broken out in very much the same way that we're going to dig into right now. All right, liability definition. What is liability? It's really simple. Bad things that happen to other people because of you, your business, your buildings, anything like that. So when you hear about a lawsuit that happened or some terrible thing that happened, most of the time, the insurance that applies to that is liability coverage, right? If a building burns down, that's property coverage. We talked about that in video number 2. Now, if something bad happens to someone in that fire, then that would be liability coverage. Or if someone slips and falls on the front of your property, that would be liability coverage. Or if you give people bad advice, we'll talk about that as well. So that is the definition of liability coverage. It's important to note that this coverage exists whether the accusation is warranted or not. I talk with clients every single day who are talking to me about something they feel like is a bunch of baloney. Someone accused them of something, or they hired a personal injury attorney, or they hired a public adjuster, and it's just a bunch of baloney, and they're having to deal with this stuff. And that's a reality, but your insurance still applies in those situations. So it's, bad things that happen to other people, whether you think they were legitimate or not, it's important to note. So what is covered? Well, generally, and different insurance policies are all different, but generally it covers for the defense and settlements based on your policy agreements, so the words in your policy, what they say, the limits, so the coverage limits in the policy. If you have $1 million of coverage, it's not going to cover more than $1 million in the situation, the limit, and then the structure of how it's set up. Sometimes there's deductibles for liability coverage. So you would cover the first $5,000 of something bad happening. The insurance company would jump in after. So you do want to make sure that you look at your policy and you really understand how it's set up. So we know what liability coverage is. It's coverage for bad things that happen to other people. And we know what it covers, the defense and settlement, based on your policy agreement. It's good to note that most of the time, the insurance company will have control over who the lawyers are. You can suggest lawyers, but ultimately they have the primary control. They also tend to have the control over whether they settle or not. I see in lots of situations an insurance company paying out $10,000 and the client saying, "What are you talking about? This was total baloney." Again, it's up to the insurance company to decide whether they settle or not and to choose the lawyers. So that can sometimes feel like a downside, but that's the reality. They want to have control. They're ultimately paying it out, and so that does kind of make sense. All right, so let's fly through the types of liability coverage. And here's what I want you to think about as you're going through this. One, does my business need this coverage? And two, wow, there are a lot of liability coverage types, and that's why it's so important to actually have an advisor who helps look at your business and make sure you have them right. All right, I'm going to zoom through this stuff. The first one that you think about is called general liability coverage. This is coverage for physical injuries. Someone was hurt and slipped and fell on the front of your apartment complex or the front of your business or in your business. Something physically bad happened to someone. That is called general liability coverage. It's the most common type of coverage, and it's when people think of liability coverage, that's what they think of. Although I'm going to show you 11 other kinds in the next about 3 minutes, so we'll prove that that is not the only kind. Limits are per occurrence, which means per bad things that happen. So if someone slips and falls on your sidewalk on Sunday, and then someone else does that on Tuesday, you have 2 occurrences. Each one would have its own limits. And then there's an aggregate limit. So if you had those 2 scenarios, someone slipped and fell on one day and then again on another, the aggregate is how much the insurance policy would pay out total over the course of a year, no matter how many occurrences there are. A common base coverage is $1 million, $2 million. That means you would have up to $1 million per occurrence, and you would not have more than $2 million no matter how many occurrences over an entire policy term. So if both of those slip and falls were $1 million slip and falls, you would not have any coverage for any future occurrences in that given policy term. All right, let's look at some other kinds. Products and completed operations. Coverage for bad things that happen to other people if a product or operation you sold fails. So if you sell a toy and a child is injured from that toy, that is products and completed operation coverage. If you build houses and something bad happens to someone because of the house, products and completed operations coverage. Personal and advertising injury. This is slander of another person. So if you go out and you say that business is bad because X, and then they turn around and sue you because of that, personal and advertising injury would apply. Are you seeing here how general liability coverage is only for physical stuff? And all these other things are coming in. Let's talk about some more. Damage to premises rented to you. So if you go out and you have a party and you rent a place to have the party and somehow you all start a fire and that fire causes damage to someone else's property, this is the coverage that would come into play. Medical expenses, I love this coverage. Very easy to access, limited coverage, usually just $5,000 or $10,000 for medical expenses associated with physical injuries. So this is very easy to access. It's kind of to avoid a big lawsuit. Look, we'll cover your broken arm, $3,000 from the hospital for your broken arm, so you don't file a lawsuit against us and try and get a bunch more. That's a nice coverage, medical expenses. Professional liability, which is also called errors and omissions coverage. If you are a lawyer, if you're an insurance agent, if you're a realtor, if you have people jumping into your syndication for an apartment complex, you're giving them professional advice. You're saying, hey, I think you should do X with your money, or X to protect yourself, or X to create a contract with someone else. So this is coverage for bad things that happen to other people because of your advice or decisions. If they come back on you and say, hey, that advice got me in big trouble and I'm going to sue you over it, that is professional liability, errors and omissions coverage, right? Number 7, employment practices liability. So if bad things happen to others because of your hiring, firing, or workplace decisions, again, this includes accusations that maybe aren't legitimate or you don't feel are legitimate. And this happens a lot. EPLI, or employment practices liability insurance, super important to have. Employee benefits liability, not as commonly known, but this is if you weren't able to follow through with the benefits that you had promised to an employee. There's actually insurance coverage for that. Liquor liability, bad things that happen to other people because they consumed alcohol that you served. Super important. Cyber liability. This is becoming more and more important, and really the insurance is becoming more and more expensive. But this is coverage for bad things that happen to other people because their information was breached while doing business with you. Some huge companies are having breaches like this. You're seeing it in the news. Cyber liability coverage is the type of coverage that's going to help them with that. Directors and officers liability coverage. This is coverage for bad decisions that are made by a board of directors. Does your business or nonprofit have a board of directors? Are they making decisions? Someone could say, hey, this board of directors made a decision that was wrong, caused me problem, and now I'm going to file a lawsuit. All those people on your board could be personally liable, could expose their own personal assets if there isn't directors and officers liability coverage. If there is a board on your business, you should absolutely have this coverage. Hired and non-owned auto liability coverage. So this is coverage for hired or non-owned cars that are working for you at the time of an accident happening. Their personal insurance could say, hey, they were working for your business. So at that point in time, that is not our responsibility, your personal insurance policy. That is the responsibility of the business. You were working for them. The liability is the responsibility of the business. If you don't have hired and non-owned auto liability coverage, you may not have any coverage for that. So I think that was the last one, 12 different types of liability. My point here is to point out a few different things and to say, hey, it's really important that you have an insurance agent who's looking at your business and making sure you have all the right types of coverage. You also, obviously, should listen through this and say if there's any type of coverage you feel like you should have, I hope you took notes and say, I think I should have number 1, 3, 4, and 5. Go to your insurance agent and say, hey, do I really need this? Talk that through. Some of these are incredibly inexpensive. I just put together an EPLI policy for someone that was like $40 a year. Right? I mean, no brainer. So some of these are more expensive and some of them are less expensive. So it's important to understand them. The last section of this video, very quickly, I just wanted to talk about contractual liability language. The contracts you enter into are the foundation of conversations when claims happen, especially if there's, you had a property manager, they were doing work, they caused a fire, that caused injury to someone. Now we have multiple entities involved. The contracts that you get involved in are the key to the answers to those questions. Claims are based off the contracts that you have in place. And so many people, I look at a lot of contracts because I ask a lot of businesses to send me their contracts so I can review them. And there are a ton of bad contracts with bad language in them that really pushes all of the liability onto my client. And that is not what you want. You want at least a fair contract. And if you're going to have it sway one way or the other, you want to push liability onto someone else, right? That just makes more sense. So just a few terms about contracts here at the end of the video. Additional named insured is super important. This includes this person or entity in the coverage on that policy. So I see this all the time. If you have a property manager, if you're the owner of an apartment complex and you have a property manager managing, you want to make sure you are named as additional insured on their policy. If they do something bad, if something bad happens to someone because of them, and you experience a lawsuit, you want their policy to protect you as well as them so you don't end up with a claim on your policy costing you extra money in insurance in the future simply because your property manager made a mistake. Being an additional named insured solves that. Primary and non-contributory, this is another way of saying, hey, your insurance policy is primary. You cannot ask me to contribute to this bad thing. I'm not going to go in the weeds on primary non-contributory. It's probably one of the hardest ones to really dig into. But it's whose insurance is primary and whose insurance does not contribute at all. Right? That's the way you set that up in contractual language. And then waiver of subrogation simply says, look, your insurance company can't come after my insurance company after paying for a claim. That is commonly asked for by people as well. All right, so what did we cover? Well, we covered the definition of liability. We covered what it covers, limits, and things like that. That's the 12 types of liability coverage. And there's more than just 12 types. Those are the 12 main ones that I put on there. There's lots of types of liability coverage. Make sure you know what they are and you have them right. And finally, contractual liability language. All right, we got there. So if you want to download the portfolio overview, go ahead and go down to that link in the description and download the portfolio overview there. Really helpful in getting things organized and getting your insurance right. And of course, if you want to watch more videos, go to the playlist for the rest of this business insurance series. And if you'd like to connect with us on insurance, please head over to shineinsurance.com. See if Shine is right for you. All right, until the next time, don't forget to shine.